Hey, it's Remco here, CEO and co-founder at Standard Ledger.
Yeah, it's John Nixon here, the R&D Tax and Grants Specialist at Standard Ledger.
We're here to chat today, just a casual chat of what is this thing called the R&D Tax Incentive and why it matters. So, John, in a couple of minutes, can you give us the highlights of what the R&D Tax Incentive actually is?
I certainly can. It's a very good scheme to be involved in for early stage and startup companies, which is our sort of bread and butter. It's a tax offset where if you're doing R&D, as it's defined in the tax legislation, you can go through a process, which I can help you with, to get a tax offset, which is going to also turn your tax losses that you may have into cash. That's really the main reasons for its existing.
So, at a CFO level, I'm really interested in cash, right? So how does that work, right? So I'm doing some R&D, right? What is that? What is R&D? And how does the losses equal cash at the end of the day? I'm really confused.
Yeah, okay. Well, I'll start with the first part of the question. What is R&D? It's all about experimenting, believe it or not. That's the kind of wordage they have in the legislation. It's a bit scientific, but if you interpret it right, this whole scheme is set up for companies doing R&D, not R&D sort of offices and universities. They have their own funding. And so the experiment is to just try to solve a technical problem, which is between you and your improved product, process, or service, is what it is, right?
Cool.
And
So I've got an experiment. I'm
yep,
doing something technically challenging, right?
yep.
I guess how does the money part work?
Okay, it's actually 18.5% is what's called the permanent tax benefit. So if you were fully tax paying and you were doing $100,000 worth of eligible R&D, that's how much it costs you to do these R&D activities, and you go through the process, which we talk a bit about more in a minute, I guess, is that you will pay $18,500 less tax than you would have otherwise. But the good news is if you're in tax losses, have enough carry forward tax losses, or you're pre-revenue and all you're doing is burning money, right?
Like many of our startups?
Correct. Not only do you get that 18.5%, but you also get the 25%, which is probably what your company tax rate is. So instead of foregoing tax losses, because you wouldn't, instead of having tax losses accumulate, I should say, you're foregoing those, but you're turning them into cash. So 18.5 plus 25 is 43.5%. Spend your $100,000, go through the process, get $43,500 cash back.
Yeah, sounds good. Is everyone eligible for this job? Right? Like, can any company do this?
That is a interesting question. Sort of no, there are some structures that you can have where people might otherwise be doing, what's defined as R&D, but can't make an R&D tax claim and register their activities. And that's one, for example, is trusts. If the trust is incurring the costs of doing the experiments, then that's a no. There are a bunch of others, probably too complicated to go into now.
But in essence, if we're a vanilla company, right, doing genuine R&D, we're eligible. Yeah.
Yeah, it's a broad-based scheme, and it's sector agnostic and industry agnostic and everything else. But something else that might get in the way of you making an R&D claim is where are the activities undertaken? For example, if let's say we do a lot of software kind of companies, and they might be, for example, having all the development done overseas. In that case, unfortunately, you're more than likely not be able to go to the point of making an R&D tax claim because, as you might imagine, the federal government set this thing up to incentivize R&D undertaken in Australia. And
Right.
so they'd rather you...
Tax break in Australia, so they want you spending in Australia. Makes
Correct.
sense.
Yeah, that's right. So, contract your, development out that is R&D to Australian, software houses rather than, ship it off to India or wherever.
Yeah. Okay. And, it has been a challenge, I know, for some of our clients that they're not just going to India or Philippines or that because it's lower cost, but they just, struggle to get the talent in Australia, right? So, but unfortunately, it's not claimable, right? So you must have seen a few things, right? Including what can go wrong, right? So what are certain things that you've seen that can go wrong and a quick tip or two on how to make it right?
Yeah, okay. So that one that we talked about before was one of them. Some people think, oh, great, I'm going to make an R&D claim, but unfortunately I can't because it's all overseas labor. The things that people can also do wrong is sometimes there's things about timing of payments to what are called associates, and I'll give you an example of that. If you're a company and you're, maybe you're the sole director, sole shareholder, and you're doing the R&D, right? And you're employed by your own company or you're contracting in. But if your company incurs those costs, you send them invoices if you're contracting, but you don't actually pay them in that financial year, then you can't make a claim against those in that financial year.
Yep, it kind of makes sense. Again, all of this roughly makes common sense, right, to me when you're explaining it, which is great. So we make sure we're paying in Australia. We make sure if they're related contractors that we're paying them in the financial year. What about documentation and timesheets and stuff like that? What do we need there?
That's a good thing. So, and I'll split that up. Documentation is a big thing in R&D tax because it's actually an eligibility requirement. If someone for the government, the ATO or the Department of Industry, Science and Resources, they're the two regulator bodies. If they were standing behind you while you're doing the R&D and go, yep, that's absolutely R&D, but you didn't ever keep any records to evidence not only that you did stuff, but what you did was R&D, then you can't make a claim. And the reason for that is it makes sense. It's poor practice to be doing R&D and not documenting what you do. What happens if your R&D people get run over by a bus? How is anyone else in the organization going to carry on the R&D? It just doesn't make any sense.
And so what are some examples of the documentation? Right.
Yeah, well, the other one you started talking about was timesheets as well. They're not mandated by the ATO, for example, but they do have some guidelines about documentation in general, both of the regulatory bodies. But where you might need to keep something like a timesheet or have a record about, intensity on R&D is where some people are doing some things within the company which are R&D and some things which are not. And how are you going to then apportion their salaries and their other costs into the R&D claim or exclude them? And so if you don't have any record basis of that, then like any other tax deduction that you might be doing in your business or in your personal tax life, the ATO wants it to be based on some kind of record.
Great. All right. Let me see if I can do my best to wrap all that up. All right. Obviously, we can talk about hours and come along to a webinar or have a look at our guide. But in a nutshell, I'll call it a pseudo-scientific description of the experimentation you're doing. It is genuine R&D, all right, in whatever area. Make sure that you're doing that work in Australia and you're an eligible company. Keep an eye on your costs and how you might allocate that between what's R&D and what's not R&D, right? Go through the process of getting all this approved. Is that right, John?
Yeah, there's a registration process of these activities or R&D projects, and the experimental ones and the other ones that support those experimental activities. So you talk about that. It's a wordy kind of narrative that you put together. And then the other side of it, of course, and that goes to the department. And then the other side of it is, of course, the what's called the tax schedule, which is the calculation of the expenditure, and that stitches to your tax return. Of course, that goes to the ATO.
Right. So Aussie Industry approve the project. They give you a registration number. You stick that registration number into your tax return with your tax accountant, right? And then how soon can I expect the cash?
Yeah, okay. So it depends on how quickly the ATO then can, go through your tax return, and that depends on what time of year it is and things. But it's not necessarily days, but then it's not necessarily months either. But they'll if you, like I said, if you're in tax losses, what it is cash back, assuming you don't owe the ATO back taxes.
Yep. And so typically we're seeing those in 4 to 6 weeks. John, I think it's been great chatting with you. Thank you all for joining us. Hit up John or me with the details below, and we'll see you next time.